from Solstice as well as Axel. You can find us on solstice.axel.com for retail as well as institution. Axel ATRAI is more designed for institutional investors and accredited investors. The most important thing, we're not a broker dealer. Our past performance doesn't give us any indication of our future results. You remember, use this at your own risk. Check the YouTube channel, give us your commentary, smash the like button, share with your friends, and let us know what you think. Let's go to the first slide that I have up here. And what I did, I wanted to talk about basically the overall market in the last couple of weeks since February 28th, when war started in Iran and USA. The volatility has picked up quite a bit, especially between the VIX crude oil, as well as, they opening they open it one day, they closing it, one day they're going to have ceasefire, one day there's negotiation and stuff. So remember, as an investor, you want to understand what your outcome is when you're putting money on the line to invest in it. So what is your expectation on the short term as well as the long term? Whether you are a day trader, a swing trader, a moderate investor, you have to pick your wounds to understand the risk involved. And what I did here, I put basically the IWM N instead of the M. I put the value in the IWM, which is the Russell 2000. I said because Jay Powell is coming in on Wednesday, whether he's going to be dovish or hawkish, we have to pay attention to what is the statement of interest rate, income, as well as employment, as well as what's going on in the global markets, because that can set up a move higher or it can set up a move lower. So pay attention to that. And most of the people that were about a week, 10 days ago, before Trump did the announcement, hey, we have the ceasefire and we're going to extend it to a little bit longer period of time, it moved the semiconductor and the tech sector quite a bit. And you can see that the outcome from that move down here in April all the way up, you have three nice bars going up. But on Friday, we had an inside bar because we looked above and came back in to close on the IWN, which is the value play in the Russell 2000. Right in there, and you can see that we are in a linear regression uptrend channel. Are we going to go to the high or not? Pay attention to what the outcome is and the expectation. Use technicals in order to help you. This is for illustration use. And remember, smash the like button and let us know what you think. Let's go to the first slide that I have up here, and I put 2-year, the S&P 500. You can see from the January low beginning of the year, from April 2025 till the December high, you can see the 0 and 100%, where the 50% is, where the 61.8 and the 78. When we double topped up here between the January and February area here, you can see we had like a head and shoulders. If I zoom in here, we can see that was considered supply area because we broke out of the October high and the December high of 2025. We looked above and couldn't make it. We fell back down here. That was the federal interest rate bearing account. This was the tariff. The rally. Then we got the war between Iran and US, and we fell further down. You can see the extensions. This was the February high. This is the March low. If I go to get the measured move or the Fibonacci from high to low or vice versa, you can see that this is the February. This is the March 2nd high, all the way down to the March low. But I'm going to draw from low to top because I don't have the extensions going in the opposite direction for the 123, 138, 150, 161. I only have the 161. This is why I drew from negative to top. You usually draw from top to bottom to get the extension to the 123, 138, 150, 161, and so on, 178 and 200% going up. So I drew this that way so you can see on the SPX where those extension and where those island reversals are. We filled this gap because this was the Friday, Thursday, because we looked down double bottom from the Wednesday candle the Tuesday candle, that was the Monday candle, that was the Friday that had the gap. We filled the gap. We came up, filled the gap, came back down, rallied up on Wednesday. Thursday was a down and a move back up inside the range. And on Friday, we looked into the close of and almost open on the SPX and rallied and continued higher. And we closed above for an annual new high. So if most people take the measured move between the high and low or a Fibonacci, I'm going to go get the measured move just to show you between the high and low is. I usually take the 5-day range. You can see if I do take the 5-day range, this is my extensions where the gaps are. But most people are going to look from that bottom gap, which you got 3 island reversal. This is 1, this is 2. That was the 3, which we filled up the gap and continued higher. So you got this gap here, this gap here. It does not have to fill. You can see where you're 50%. If I edit the property, I want to show you where the extensions are from 0 to 100, 100 to 200, and vice versa to the back minus 100. I'm going to change that color to blue, and I can extend it all the way back to January. Let's say I go to the 1st. At least you can see where those extensions are, where that consolidation coming back to where that supply was, or the peaks of this valley. That would be a great opportunity coming down here and bouncing up. But if there's going to be continuation on Monday, so pay attention to the 50%, the 161, the 78% going up, and vice versa to the top. And you can see where the 150 is. So I hope this is helping you to understand how to look at the measured moves. Let's take a look at the NDX. NDX, this is where the semiconductor and the technology sector, I do have the monthly expected move in here from the prior month high and low. You can see we're almost at 200%, and we got these gaps. This is 1, this is 2, this was the 3, which we filled on Friday. We looked into the prior day high and the value area high, and we continued higher, looking towards the 100, basically 150% move up to the 100% move up from the March low. Once the March is moved, I will re-anchor the Fibonacci for the April levels from the low to the high to get the extensions on those. Let's take a look at SMH in the semiconductor, SMH, and you can see in the SMH right here. Come on, load up. Okay, we can see that in the SMH, since that triple top, because we looked above and failed, we came out of this wedge, that downtrend channel. You can draw it either from here or draw it down here. And this was the breakout after the March low, the rally, and the tweet on Trump. You can see that's an island reversal. There's 2 here, there's 3 here, there's 4, and there's continuation. Most people timed it off a little bit on the semiconductor because most people were thinking this is a little overextended to the high. If it should come back here, fill partial gap, those island reversal. It never did, and we continued higher, but we are a little bit overextended. So what I'm going to do, go to the study. I'm going to change it to make it a little bit more efficient for you guys. We're going to load up the study. From here, we're going to load up the RSI AB, and it's going to be clean with the moving averages. The reason why I want everyone to pay attention to the 5 simple moving average and the 18, between the 5 and the 18, there's a midpoint here, which is a moving average between the 18 and the 50. I use an 18, not a 20. There's another moving average, and you can see how far we are extended from the 18, because this will do a little bit more catch up to the up here, and at the same time the 18 is moving a little bit more sharper to the upside. Let's take a look at the XLK in the tech sector. And you can see in the XLK here, at the same time, we had that big area here of volume profile that was considered supply, and eventually we broke up and continued high. And you can see that big move in XLK. It is above the 200%. So even if I edit this property, I will show you how to. You can see the 261, that minus 161. I'm going to make it 232.382. And 38.2 fib, I'm going to make it 2.618. Or you can use basically the 250%. Let's go to the orange color, and that should be about it. And this one should be a 2, the depths of it. and you can see this is the 238, so we're a little bit further away. If I edit it and put the 23%, let's do this and put the 223, 2.236, and this one would be the fine one, and here's your extensions to the upside where we landed right just above it on the extension to the upside on XLK. Let's take a look at the Magnificent 7. Most people are going to use Mag 7, but I'm going to include in there Netflix, and I'm going to use the one I set up, and I added a plus sign between Amazon, Google, Meta, Microsoft, NVDA. I added Netflix part of it and Tesla, and you can see after that large consolidation for a couple of months from the prior year, and the January high here, we fell down. We were in that consolidation chop face mode in the bottom, then we fell further up, then we rallied up, and now we are coming to that exhaustion. It's going to depend on what the earnings are going to do in the Magnificent 7. Some of them have reported it, some of them have not, but I wanted to show this to show you, hey, pay attention to the tech sector, because part of the XLK and the QQQ did 38% in the S&P 500. Let's take a look at AMZN, Amazon, and you can see Amazon just slightly broke out of here on Thursday, tested it, came back in, and Friday, since that was the prior year high, you can see we double tapped it here on the breakout. You take it long. I'm going to show you a similar setup in Google or Goog. You can see in Google it is setting up. It doesn't have to continue higher, but I am paying attention if this is considered a continuation, or we're going to find resistance up here in case we break out, and if not, we come back to fill partial gap in this area. That would be great to buy it back, because the 18 SMA will catch up, and the 116 as well as the 50. That's in Google. Let's take a look at the now ONDS. I'm giving a couple of ideas before I do the measured move on most of the instruments. You can see an ONDS, you can see that move down. The ATR is moving quite a bit. It's almost 2.5 standard deviation. It's at almost at $2 in a couple of days. You can see that move back down. If the 50 and the backside of this channel hold, and I do break out of this candle and the Thursday's candle here, and I continue up, I'm looking for the target of $15 in this area, $14.75 to $15 in case it does the setup. Let's take a look at right now the micro ES, which is the S&P 500, and what I want to do here, break it down for you in the S&P how I did it, and I will take these measurements out of the way so everyone will understand it, and we'll reset it up here. I was helping someone in the room earlier, and this is why I had these up there. So what I want to do is just show you where that moves straight up. We consolidated for 5 days. This was the Friday candle. This is the Friday, and we got a new high. So what we can do, go to the 10-day or the 20-day 1-hour chart. You can see that we consolidated, rallied. Now we are in consolidation. If I take just the last 5 days on the charts from the Sunday and the Thursday low to this high, that's my measurements for the week. So I take the high from here to this low here, and this will give me an anchoring for the week, and I'm going to edit the property. I'm going to move it to the right to 1. Okay, and I'm going to change the color from 0 to 100, 100 to 200, and vice versa to the back in cyan or baby blue. Push OK. That will give me the extensions to the left where my levels are for the weekly measured expected move, and I will do it on the daily chart to show you how it would look like. And this is the reason why I put it up here. I wanted to show you where the consolidation happened. That used to be the supply. Even if it comes back in this area on the SPY or VU and so on, or the E-mini, it is healthy to come back in and continue higher. But if there's a breakout, at least you know where your extensions are and where your buy zones are for the measured move, because the RSI on that last leg up, you can see it created a lower high while we were making higher high here on the platform. So this is on the micro ES. Let's take a look at the micro NQ. You can see in the micro NQ, I did a similar thing. That was the double top from the prior year. And this year in January, we fell down and we rallied up and we continued. We broke out of that downtrend channel. We had one down here. We broke out of it. But that tweet that supply area was basically a runaway train, and we pushed high, and you can see that the distribution is higher on the Nasdaq compared to the S&P, where there is more consolidation, and you can see the RSI starting to make a little bit lower high. It can continue higher, it can even linger at a higher level. The RSI or the stochastic CCI or the MACD, the most important thing is you understand the levels and understand and respect those Fibonacci's and measured move and expected moves in the charts. Even if in case we've pulled back, you look for the where most of the double tops are, and the last where the supply is. If not, there's continuation, it can still run. It doesn't have to come back in. So this is on the Nasdaq. Let's take a look at the RTY. And this is in the small cap. I did the same thing here on the RTY. What I'm going to do is show you the micro NQ, the micro 2K, which is the same one. Oops, micro 2K. So what we want to do, you can see the measurements from last year. This was the consolidation. This is the breakout. You can see that triple bottom, the rally out of that downtrend channel broke out, and that was the downtrend channel that we broke out of, no longer valid. Remove that drawing. Oops, we can see we have a sharper move straight up. We can get the tool to measure the distance from this low. You can see the high, it's about 17.4%. But if I measure that linear regression uptrend channel, you can see whether I anchor it here and here, we're starting to break by time and range bound. So pay attention to the Russell if there's going to be continuation or not. And the RSI is pointing a little bit lower in that downtrend, and you draw the uptrend channel. It's basically starting to bend. Pay attention to the 61.8 fib or the 23 coming back in on the Russell. So if I do in the style setting, I'm going to go to 20-day 1 hour. If I go here in the style, I go to monkey bars. I wanted to show this on this is basically a 3-day range. You can see the Russell being overlapping between the points of control up and down. And if I go to a 10-day range, let's go 10 days. Where is it? I want to show that we grinded higher. We had a VPOC down here. These were retested, and this is overlapping each other. So the point of control is here, the value area high here and value area low. That's the shadow on the volume. That's the total volume that happens in a price of a candle, where the highs are made up here. If you put your mouse, this is your high. You can see it up here. It marks it for you. And this is the low. Whenever you get a wick at the top on a candle and you get a wick on the bottom, the auction has finished. And where most value is down here at the shadow up here, and that's where most value at the high is, and that's the point of control where most volume happened for that day. But if you take the 24-hour high and low between the Asian, European, Middle East markets, Canada and US and South America, the time spent was a little bit lower, so the expected move is a little bit further down. It does not have to, but this is a way to look at it. So that's on the M2K. Let's take a look at the micro NQ. And I wanted to show the micro NQ. There's a virgin control point. This was basically another virgin control point, which was never retested. This one I think was tested or not. Yeah, this was another virgin control point. And we do have one more here and one up here. So the way to do this, I'm going to show you how to do this. We're going to anchor it to show you how to look at the VPOC. These are virgin control points. That means they never been retested. The reason why I want to show them, basically they usually come back and revisit in the future, but they do not have to. There's 1, 2, 3 here. You can see there's a 3. This one wasn't tested. Looks like it might have been tested, but I will put it up there to see if it did or not. Let's zoom in. Zoom in from here. It was tested, so that was no longer valid. It's been tested on the bottom. So I can move that up all the way, activate, grab it. So we can go up to this area here. This was never retested. So you can see it, and grab this and put it here. This one was basically tested. So the other virgin control point is right above us right here. And we can move into the front and put the last one up here on the chart. So these are usually the virgin control points, value high, value low, and point of control. We can trade inside the range, above the range for continuation. You can see coming back down to this area, basically you bounced off the point of control nicely and you cleared the value area low on the Nasdaq. You can see where the open was that little box here and the close was basically here on the charts. This is the open and this was the close on the Thursday candle, so it was a negative candle inside the range. This is a look in the range and break out of the value area high and the prior day high and continue up. So I hope this is helping you to understand that you need to use the market profile so it gives you an overall view where those levels are, whether you're using the Nasdaq, the S&P, the Russell, and so on. So last but not least, let's take a look at VU and we'll break it down, or we'll use the SPY. In the S&P 500, you can see where I marked that area. We're going to go to the daily 1 year so everyone can see it. We can see where that marking is coming, from the Federal Reserve interest rate, the tariff, the breakup. We couldn't get above here. We kind of consolidated, couldn't clear. We fell down. That became supply, and we gapped up from here and continued up. So the measured move on the SPX for the following week, I'm going to go get the measuring tool. And this is what I want everyone to grab: the prior Friday's high and the low on that happened on Thursday, and we extend it to the right and change the color, edit the property. We're going to make it go back all the way to 1, and we're going to change the color to baby blue so everyone can see where those levels are. And coming back to the bottom, possibility, if it does, you can see where my 0, my minus 50, minus 80, usually you find some kind of support in this area for a reversal back up. But if there's going to be continuation to the upside, pay attention to the 200% and the 161. And this channel is coming from way back. That was on 12/21, I believe. Yeah, 12/16/2021, the uptrend channel, which is continuing up. Even if it's retested, that would be great. I'll show you on my annual charts time frame. We can go to a daily chart. We can go, let's say 15-year. We can do a monthly or a weekly. Let's do a monthly so everyone can see those levels. I'm going to move those. You can see the uptrend channel where it is coming from on the charts from the 2018 area to the 2022 highs, and we continued it up. We couldn't get to it in the prior years. You can see the 2022, 23, 24, 25, the dump in April, then the rally up, and now we did the same thing in March, and we got the monthly bar up here. So if I remove these drawings, let's just remove the Fibonacci's, remove this one, and you can see where my levels are. This is where my value high is, my value low is, and my point of control. I did show you the monthly bar. We are away from the 18 SMA as well as the 50 on the monthly. Usually you come back to revisit somehow in the future the 50 SMA. You can see it measured it here. We missed it here. We missed it here. We continued between the this is on the monthly. If I go to the weekly chart, 3-year, I want to show you how far away when we retested here. We got a nice rebound and the RSI continued higher, but we are breaking out of the RSI downtrend on the monthly. It does not have to continue. We can get a little chop, come back for the supply area and bounce back up. I hope this video was helpful. If you have questions, once again, check us out at solstice.xlatrai or xlatrai.com or the phone number below. Take care, over and out.